Okay, I'm going to talk about Alphamin Resources Corp. Now, the reason I am talking about Alphamin Resources Corp is I was listening to a podcast the other day, and they turned me on to the prospects for tin. You know, the tin story is very much like the copper story. It is a metal that is in demand in the electrification of the world. The more the world electrifies, the greater the demand for tin. Tin is used in soldering. So the thesis is as the electrification of the world accelerates, tin will be in greater demand, and the supply hasn't kept up with the demand. So that's similar to the copper story. You know, the copper story is the electrification of the world increases the demand for copper, and the supply of copper resource has not kept up with the demand. So, you know, what do we expect? We expect prices to rise in that scenario. Now, that's where the similarity ends. With copper, you know, it's tin is not as popular of a metal, and it probably can't sustain, tin alone probably can't sustain a major. With copper, if you're interested in having exposure to copper, one thing you can do is buy Freeport-McMoRan, and you've got your exposure. You really don't have to do any research. It's a big, monstrous major, and if the price of copper rises substantially, chances are the price of Freeport-McMoRan is going to rise substantially. Tin doesn't have a company like that. So that's, I was interested in tin, and this is what I got, Alphamin Resources Corp. Now, what they do is they have a mine in the Congo. And let me actually get to the company presentation. But here is it trades in Canada, and I think on a few other exchanges. It's 58 cents. It's got a market cap right now of 684 million. That's what the share price was fairly recently, 21 cents, and it is now 58 cents. This somewhat mimics the rise in the price of tin in that time. Okay, so actually let me show you these. This is what tin is used for, 49% in soldering. Batteries account for 7%. So a lithium-ion battery, there is projections that tin will be used substantially more in lithium-ion batteries. So that's it. That's somewhat of the investment scenario, is that tin is going to be in greater demand as the world continues its electrification. And the supply of tin isn't keeping up with the demand for tin. Now let's run through a company presentation. So I'll quickly walk you through this. This is a company presentation, one of the world's highest grade producing tin mines, Alphamin Resources. So here's what they expect. Busy, that's the name of their mine. Busy is one of the world's highest grade tin mines, producing approximately 11,000 tons of tin per year with a grade of approximately 4.5. It's really 4. We'll get down to this. So here's what they have. 3.3 million tons of proven and probable at a grade of 4%, yielding, in the ground there's 133,000 tons. They only get about 75% of this, which takes it to around 100,000 tons of tin. So here's what you get. If you buy shares of Alphamin, you get 84% ownership in this project. And the government of Congo owns 5%, and this has got something to do with the South African government. They own 10%. Okay, let's go. Exposure to growing tin sector. This is not that interesting. I'll show you this. The tin market is entering a growth period supported by applications in new technologies. Advanced robotics, electric vehicles, and renewables all require more tin. So these are things that weren't around 30 years ago, or even 5 years ago potentially with this, and probably 10 years ago with this. So the demand is growing. They expect that the need for tin will grow at 3 to 4% a year. That's a pretty healthy growth rate for a commodity. Now, the price of tin has kind of followed the price of copper. It peaked in 2011 and fell and has kind of been in a bear market for the last 9 years, and that's knocked out quite a bit of supply. So there isn't that much supply. It looks like the demand is ramping up. So it's a good situation to, as an investor, to be in. So you want to get exposure to tin, and if you do, it's not easy to get exposure to tin. Well, here, I'll talk about this. Here is measured and indicated. Measured, indicated, measured and indicated 4.32 million tons of tin at a grade of 4.61 with, so in the ground, 199,000 tons of tin measured and indicated. And proven and probable is 3.33 million tons at a grade of 4, so 133,000 tons of tin in the ground. And I think that's all that I wanted to say. Actually, I wanted to say this. Here's what the mine is expected to produce. So these are company numbers. In 2020, 10,000 tons of tin. 21, between, that's roughly 12, gets up to maybe 14. So it's between 10 and 14, and then the mine starts dropping off. So this is all proven and probable. And this is where the measured and indicated comes in. Now, I don't really like using measured and indicated because it's not proven and probable, but I wanted exposure to tin, and I'm really stretching the explanation of why I bought it. I think in my analysis, it might be overpriced, but I bit the bullet and bought some. I didn't buy a massive position in this, but I bought some because I want the exposure, and there's no other way, as far as I can see, to get exposure directly to tin. Okay, so let's run through the numbers. Okay, let's take a look at the income statement. Their auditor is PricewaterhouseCoopers, so that's somewhat refreshing. So here's the income statement for the year ending 2020. They had revenue of 187 million. Where's operating profit? They had an operating profit, and they were net income negative. So let's go to the management discussion and analysis. So for the quarter ending December 2020, they processed 93,560 tons of ore. So this is not that far from boilerplate. They operated at capacity in the last quarter of 2020. The grade was 4.2%. The recovery rate was 74%. This is likely going to rise to about 77%. They produced 2,898 tons of tin in the fourth quarter, and the price they received was 18,497. If you take 93,560 tons and divide it by 90 days, that gets you to 1,039 tons of ore per day. We think going forward, they're going to be able to do 1,100 tons per day of ore. So that translates to 33 tons of tin per day. So what we're looking for in 2021 is something in the neighborhood of 300 million in revenue compared to 187 in revenue in 2020. So that's what they had in 2020. We think this number is going to be 300, in the neighborhood of 300 for 2021. So how did we get there? 33 tons per day of tin times $25,000 per ton of tin times 360 days gets you very close to $300 million of revenue for 2021. So here's what we got. This is me trying to justify my purchase of Alphamin Resources. So here's the all-time high price of tin was 32,500 a ton back in 2011. On yesterday, the spot price was 27,480, and the 3-month future is $25,630 per ton, TONNE. So I'm using a $24,000 price of ton, and here's the mine, here's the output. 3.3 million tons of ore at a grade of 4%. We recover 75% of it. That means in the ground, that's proven and probable. So I've got proven and probable and measured and indicated. I'm going to call that 100,000 tons of proven and probable. Revenue is $24,000 a ton. The cost, this is the all-in sustaining cost, is $11,000 per ton. I gross that up by 30% to get a pre-tax cost of $14,300 per ton. So revenue minus pre-tax cost is $9,700. So that's basically earnings before tax. So the daily ore production is 1,100. That won't be going up. That's pretty much boilerplate. So they're running at full capacity right now. Maybe they can increase that a little bit, but that's basically it, unless they add a whole new unit to produce the ore. That means 33 tons of daily production of tin. So that, with a 360-day year, that means 11,880 tons of tin is produced. Okay, so earnings before tax per year, 115 million. They own 84.5% of that, 97.3 million per year. Life of the mine, 11 years. That's what they're telling us. And to justify my purchase, I'm using the measured and indicated to add to the life of the mine by 10 years. So here's what we get. Here's a net present value calculation. Okay, so 97 thou. I'm using a discount rate of 11%. They're in the Congo. Normally I like 9 or 10, but I feel I have to go with 11%. 97, present value, pre-tax, present value after tax. We add this up using a 25% tax rate, and we get to a value of 590 million US dollars. So how does that compare with now? Net present value of Alphamin's net earnings, 590 US. Gross that up to Canadian. That's 742 roughly. There's the exchange rate I'm using. They have debt of 75 million. That gives them a market value less debt of 666 million. Well, heck, at 56 cents a share, it's valued at 661 million. So yeah, it's trading at a discount. Very small discount. Okay, so that's my problem. So I bought in, I want exposure to tin. I'm working with a $24,000 tin price per ton. Now, look, my thesis is this. I think that the price of tin is going to surpass its all-time high. That's why I bit the bullet and bought this. So what happens? So sorry, let me back up. The current price is 56 or 57. I think it's 57 right now. At a price, it's fairly valued right now at this price. If the price doesn't move, I wish I wouldn't have bought it. But that's not why I bought it. I bought it because I think the price is going to move. Now I'm adding a premium, net present value plus 20% premium. Why? I want to show you the price of tin. Here's a chart on the price of tin. Okay, so this is November. In November, the price was 17,000. Today, the price is 27,800, spot price. Okay, so as people see that, they might be interested in tin, and they might want some exposure through a tin miner. Well, they're going to have to land on Alphamin. There just isn't that many tradable companies that have tin as their major commodity. There are some that trade in China. I don't think we can buy them. There's one in Peru that trades only on the Peru Stock Exchange. I don't know how to buy that, and I wouldn't want to try. So I'm left with Alphamin. So that's why I'm doing the 20% premium. As people get interested in tin as an investment, they might land on Alpha. They're likely going to land on Alphamin because there's no other games in town. Okay, let's say we trade at spot. And let's say spot is 27,500, 27. Actually, spot is 28 today, 28,000. Boom. Okay, it changes a little bit. 56, fair value would be 82 if we apply the 20% premium. Fair value is, it's a nice little gainer. Let's say we surpass the all-time high, or we reach the all-time high, 32500. We got a double. We've got a double. So that's it. So, I bit the bullet. I bought Alphamin. Here's what I wished I bought it at. I wished I bought it at 40 cents a share instead of 56 or 57 cents a share. Then I'd be a lot more comfortable, but you can't really blame the stock price. The stock price has simply tracked the price rise of the commodity. So, why did I buy? I want exposure to tin due to the accelerating increase in the electrification of the world and the supply-demand imbalance that brings about, and the fact that there's been a bear market for about 8 years, so supply is constrained. Copper is a very similar story, and its price has risen, and its price is around 10% away from all-time highs. The 10 story is very similar, and its price is roughly 20% away from all-time highs. So why Alphamin? Because there is no Freeport-McMoRan in the 10 space. So that's it. That's why I bought Alphamin. I wished it was cheaper, but I bit the bullet and bought it. And now the price better rise, and they have some exploration activities going on. If the price doesn't rise from current price, they better have some exploration success, or else the shares are likely going to drop. Okay, thank you for watching. Onward and upward.